Hello guys, so we've got a really interesting one for you today. We're going to be talking about company car tax. Don't get too excited. Seriously though, a lot of us don't know enough about company car tax before signing up for a company car. So it's really important to do your homework before you choose your car, because the wrong choice can cost you thousands over the years that you're in the car. Keep watching guys, it will be explained. Okay, so company car tax is payable for anyone that has a company car that can be used for personal use as well as for business use. It doesn't matter if you only do 5 personal miles in it a year and 5,000 business miles a week. Whatever that ratio is, if there's any personal mileage allowed in that car, and if the insurance allows you to use it for personal use, you've got to pay company car tax on it. Hard luck. My views on company car tax is that it's wrong. If you're a business user that actually properly uses your car regularly for long distance meetings, for you might be a rep or traveling salesman, anything like that, it's not a perk, it's a tool of the trade. You know, it's like saying a carpenter has to pay tax on his chisel. To me, it's just wrong. If you've got one as a perk, you know, a kind of fat cat director who wants to drive around in a Rolls Royce and stick it on the company, fair enough, you should be paying something on it and you could see it as a possible tax dodge. But for most of us with company cars, they are a tool of the trade, albeit one that you can drive to Sainsbury's on a Saturday. Let's get going. Okay, so P11D is the form that your employer submits with what's called benefit in kind on it. A benefit in kind, or BIC as we'll see it in a lot of the slides, is any non-cash benefit of monetary value that you provide for your employee. So that non-cash benefit could be something like, but with monetary value, could be something like private medical insurance or a company car. A gym membership, could be anything like that, where instead of paying you money, they're giving you a benefit. Okay, these benefits might also be referred to as notional pay, fringe benefits, or perks. Benefits have monetary value, so they must be treated as taxable income. That's the important thing. They would cost you money if you didn't get them for free. So, taxable income. The first thing to find out on a car is the CO2 emissions figure. That's really important when you're looking at the cars. The lower the CO2 emissions figure, the lower the tax band that particular car will be in. We'll explain more about that in a minute, but you'll see why CO2 is so important. And it's also worth noting that if you're looking at a diesel car, you have to make sure it's a Euro 6 diesel. If it's not Euro 6 diesel, you'll be paying a lot more tax on it. Now, most of the leasing sites and anywhere car stats are listed online will tell you if it's Euro 6 or not, so it's not difficult to find out. Most of the modern diesels will have passed that Euro 6, so just be aware of it. Okay, so the big band is determined by the car CO2 emissions figure. So let's have a look at an example here. We'll look at one of, say, car's got 101 grams of CO2. It's 2021-22, it's 25%. That's the big band is 25%. If it's a non-Euro 6 car, so that would be a diesel car that hasn't passed the Euro 6 standard. Everywhere you look at cars on spec lists, on the leasing sites and what have you, they'll say Euro 6 or not on diesels. So most modern diesels will have passed Euro 6, but don't assume that they all have. If it's a non-Euro 6 diesel, you can add 4% onto this percentage. So that one we looked at there goes from 25% up to 29%. You take the cost of the car, you multiply it by that percentage, and that's the BIC value of the car. Pure electric vehicles, EVs as we call them, were not subject to benefit kind tax last year, so you didn't have to pay anything on them last year. They were completely zero. This year it's 1%, and next year is 2%. It goes up a little bit after that, and as I said, the government are always changing the goalposts on this, so we don't know what's going to look like in future. But right now, it costs you 1%. I mean, it's nothing. It's going to cost you £100, £200 a month for a year for a really nice car. This means company car drivers who choose an EV will save thousands compared to the driver of a comparable petrol, diesel, or even a plug-in hybrid electric vehicle. Your income tax rates. This is the other thing you have to know. So you've got the different tax bands there. So for this year now, it's 20% is anyone earning between 1 and 37,700. Then 40%, 37,701 to 150,000. 45% over 150,000. This is after your personal allowance, okay? So your personal allowance at 12.5 grand or whatever it should be. What you also have to consider is if the company car, remember we've got that value, so the the cost of the car and then the percentage you get from the big banding. So say for example you get a £30,000 car and it's in, say, I don't know, 25% band, so it's 7.5 grand. Is adding 7.5 grand onto what you currently earn going to push you into the next income tax band? You must look at that, because if it does, if it pushes you into it by even £1, you're paying 40% tax then on that car. And you'll see what that looks like in a minute in real terms when we look at the example. But yeah, if you go into the next tax band by even £1, you pay the higher rate of tax on that company car. So really, really consider that, because a lot of people get themselves in trouble. Because a lot of people getting a company car are getting towards that, possibly that next sort of tax band, and putting 10 or 12 grand on top of it might be the thing that pushes you over, and it's going to cost you a lot of money. Right, at this stage, I'm going to say, please like, please subscribe. Takes 2 seconds just to give this video a thumbs up. Helps me massively, like massively. It means YouTube will show my videos, and it also means they'll show you content that you actually want to see, rather than, you know, a mouse skateboarding down the street in San Francisco or something, although that might be cool. You can also buy me a coffee. The link's there. It's ko-fi.com/notaguru, and please follow me on Twitter at notaguru3. Thank you. So how do you calculate the cost of your company car tax? Luckily, there's a government website, which is an online form that you can just plumb everything into, and it spits out the numbers. So cccf-calculator.hmrc.gov.uk. But if you want to do it manually, it's the car cost. So that's the car plus any optional extras, delivery, VAT, all that good stuff, times the big band percentage. So if it was 25%, it's, say, 30 grand car at 25%. There you go. And that gives you the big value, and then you multiply that by your income tax level. So whether you're a 20% taxpayer, 40% taxpayer, or 45% taxpayer. We'll look at an example of that now. So an example here, we're looking at a £28,000 car with £2,000 worth of options. So that gives us a total of £30,000 for the total car cost. We can say it's a petrol car, 105 grams per kilometre of CO2. Actually, we'll say it's 104, because I think 105 puts you in the next band. I think I made a mistake there. So we'll say it's 104 grams per kilometre of CO2. That gives you 25% BIC band. Right. So the BIC value is the car cost times the BIC band, which is 7.5 grand. Okay. Tax, this is what you'll pay on that 7.5 grand every year. A 20% taxpayer will pay £1,500 a year. 40% taxpayer pays £3,000 a year. And 45% taxpayer pays £3,375 per year. So think about that, and think about any other extras you've got. So if your work pays for a gym membership for you, or if they pay for private medical insurance for you, all that's going on top. So that 7.5 grand is going on top of what you earn for them to calculate your tax band. So say I earn 40 grand, the government are going to tax me as if I earn 47,500. Does that make sense? Also, if you do earn quite a lot of money, watch out for a stealth tax on anything over 100 grand. The bit between 100 grand and I think 123, the government actually removes your personal tax allowance. So all this moves forward. Right, so you start paying tax the second you earn £1, and you go into all the different bands. You go in the 40% band earlier. So do remember that, because that's massively important, and it can have a huge effect on the amount you take home. So check that out properly. Also on fuel, you're better off, much better off, in my opinion, to just claim your mileage back from your employer. So every time you do a business trip, just put a claim in for 10p a mile, 12p a mile, whatever it is at the moment. You pay for the fuel initially, and your employer pays you back through their normal expenses program. If you get a fully expense company car, that's where the employer pays for your private fuel as well. They might just give you a fuel card and you put all your private mileage on it as well, and they just pay it. That's the end of that. You pay a lot more tax for that, and in my experience, the amount of tax I'd have to pay is far more than the amount of petrol or diesel that it would have cost me for my private mileage. Look into that. I'm not going to go into that in depth here, but just a word of warning. If the employer says, oh, we'll pay for all your private mileage as well, look into it, because it might not work out to be a sensible option for you. And then please remember to look for and prepare for the ever-changing goalposts. The government are constantly changing the goalposts on this, and you could get into a 3-year deal on a car, they change something tomorrow, and in that 3rd year you're going to get hammered on tax. So you really, really want to keep on top of the news, and every time there's a budget, watch the thing properly, understand it, read Auto Express and things online, but really, really understand it and keep on top of it, because if you make the wrong decision, it can cost you thousands. Also remember, oh look, I've spelled tax, that's interesting. I'm not a financial advisor, I'm not a tax advisor, I'm just someone that's had a company car for years, and I haven't had very good advice on it from my employer, so I've always had to look into it myself. So take advice from a qualified person if you're not sure about anything. Do more reading, don't just take this video as gospel, do your reading on it yourself. And finally, like, subscribe, follow me on Twitter, and buy me a coffee, because you're a lovely person and you want to. Seriously, thanks for watching, guys. Please do like, please subscribe, please follow me on Twitter, NotAGuru3, and tell your friends. Thanks a lot.